Avoiding property tax reassessment. Did you know that adding someone to your California property title might seem simple, but it could trigger a costly tax reassessment? Understanding who you can add without facing thousands in unexpected taxes is crucial for homeowners. Let's explore the rules to help you avoid this potential pitfall. California's property tax system is largely governed by Proposition 13. This proposition establishes the base year value and limits annual increases. However, a change in ownership can trigger a reassessment to current market value, significantly impacting your tax bill unless an exemption applies. Fortunately, California law provides a full exemption when you add a spouse or registered domestic partner to your property title. This transfer is completely protected from reassessment, regardless of the property's value. It's a straightforward way to share ownership without tax consequences. In the past, Proposition 19 allowed parents to transfer their primary residence of any value to their children without reassessment. They could also transfer other properties, like rentals, up to a combined assessed value of $1 million tax-free, provided the transfer was a gift. Proposition 19 changed the rules for parent-child transfers significantly. Now, only the primary residence qualifies for a potential exemption, and only if the child also uses it as their primary residence. A value limitation now applies, potentially triggering a partial reassessment. Grandparent-to-grandchild transfers also have specific rules. The property must become the grandchild's primary residence. Crucially, both of the grandchild's parents who were children of the grandparent must be deceased for this exemption to apply. Value limitations similar to parent-child transfers also exist. If a transfer doesn't qualify for an exemption, it results in a full reassessment of the property to its current market value. This can easily lead to a 2 or 3 times increase in your annual property tax bill. Transfers to non-family members almost always trigger this reassessment. Many common transfers do not qualify for any exemption and will trigger a reassessment. This includes adding siblings, extended family members like aunts, uncles, or cousins, business partners, or friends to your property title. Be aware of these relationships when considering title changes. Even when an exemption seems possible, specific requirements must be met. The transfer must generally be a gift with no money exchanged. The original owner must often maintain their percentage of ownership, and critical documentation must be filed with the county assessor within strict time limits. Understanding these complex rules is vital before making any changes to your property title. To avoid unexpected and costly tax increases, always consult with your county assessor's office or a qualified real estate attorney. Share this information to help other California homeowners.